3 years ago, I had a client paying through the nose for home insurance because their neighborhood was considered high risk. But then I shared a trick with him that saved him over $2,000 a year. As neighborhoods across Australia revitalise and the property values rise, many homeowners are stuck overpaying for insurance based on outdated data. The big insurers have been slow to update their pricing models, leaving you stuck with inflated premiums that no longer reflect your suburb's improving conditions and low risk profile. But there's an insider strategy I'll reveal to you that can save you thousands on your home insurance, even if your area was previously considered high risk. Newer, more agile insurers are actively seeking customers in gentrified postcodes by undercutting the big players. By understanding the specific factors they use to price policies like crime rates, claims history, and other demographic shifts, you can optimize your coverage and policy costs. So in this video, I'll break down step by step how to determine if you're overpaying, identify the right insurers for your situation, and negotiate dramatically lower rates. The first telltale sign that you could be overpaying is if neighbouring suburbs with similar demographics are getting much lower rates from the insurers. Another indicator is if your rates haven't adjusted downwards despite the rising property values and improved safety in your suburb. You can also compare quotes from different providers. If there's a big discrepancy between the highest and the lowest offers for the same coverage, certain insurers may be using outdated data. But knowing for sure if your insurer is basing rates on old data requires understanding the specific factors they consider when pricing policies, especially in changing areas. Insurance providers look at a variety of data points to calculate risk and pricing in gentrified suburbs. Crime rates are a major factor. If your area had high crime rates of theft or vandalism in the past, insurers may not have adjusted for recent improvements. They also closely analyse the crime history in the suburbs and surrounding neighbourhoods. Even if crime is down, a high frequency of past claims can inflate their pricing models. Demographic shifts are another crucial input. As higher income families move in, education and income levels rise, which correlates to lower risk profiles for insurers. Property value tends to matter as well. Revitalised areas with increasing home values signal lower risk that should translate to better rates if the insurer's data is up to date. However, simply being aware of these pricing factors isn't enough. The real challenge lies in evaluating which insurers are using up-to-date information tailored to your suburb's current gentrification status. To identify insurers properly pricing for your revitalised area, start looking for newer companies or established providers known for their data and analytical capabilities. They're more likely to have updated risk models compared to the traditional insurers set in their ways. Once you've narrowed it down, request quotes from at least 3 to 5 providers and compare their rates side by side. Significant pricing disparities can reveal which companies are behind the curve in your suburb's gentrification. Also, research online reviews and their claims process. You want an insurer responsive to the changing conditions in your neighbourhood. Once you've found the right insurer, you're already on your way to savings. But the opportunities don't stop there. As a broker myself, I know a few proven tactics that can take even more money off your annual premiums. One of the most powerful negotiation strategies is using the competitor's quotes as leverage. If another insurer is offering you a significantly better rate, you can take that quote to your existing provider and request a price match or better. Timing when you initiate the renewal process can also work in your favour. Insurers are incentivized to retain customers, so negotiating 3 to 4 weeks before your renewal date can lead to better offers to keep you from switching. Finally, make sure you effectively frame your suburb's revitalisation story with data points on increased property values, lower crime rates, new businesses moving in, and other signs of positive change. These contexts help justify more affordable pricing. There you have it. My insider strategies ensuring that you have the right home insurance coverage at the best possible rates, even as your neighbourhood goes through revitalisation and gentrification. These are the same tactics I use to help homeowners like you safeguard their largest investment as property values rise. Please give these tips and tricks a go. We would love to see how you went in the comments. Otherwise, like and subscribe, and I'll see you in the next video.